Oh boy, do we have a lot to talk about in this video, guys. But before we get into it, make sure to subscribe. Listen to this. We're doing a challenge here. If we can get to 25,000 subscribers by the end of the month in about 12 days, I'm going to do a little something special. So make sure you guys subscribe, hit the like button, and get yourself some free money from Moomoo, up to 6 free stocks, each of which could be valued all the way up to $3,500. All you have to do is use my link down below or go to StockSurfS.com/Moomoo, deposit at least $100, and boom, you get some free money. And with that being said, let's dive into the video, guys. And the chart we're looking at right here is IBM, which we're not going to talk about this one yet. We will later on in the video, so make sure you stick on throughout. But before we get into that and other stocks and earnings reports, all that good stuff, let's talk about what ended up happening in the overall markets today. And I'm sure if you guys were watching, you know today was a fantastic day. The Russell and the NASDAQ, both of them closed up over 2%. The NASDAQ went up almost 2.2%. We had the S&P up 1.6%, and the Dow went up about 1.4%, as the VIX went down 3.6%, and we had gold and silver go down a good chunk. I think silver went down 3% on the day, gold down a little bit over 1%, maybe 1.2%. So not the best day for the metals. Volatility went down, but it was a great day for the overall stock market and a lot of individual stocks that you and I own. So cheers to that, guys. Cheers to that for the nice day that we had in the market. So let's break down a little bit more, in depth what I'm seeing here on these charts. Make sure to hit the like button if you guys haven't done so already. What I'm noticing here is SPY on the 20-day chart and Triple Q on the 20-day chart. Remember in my previous video, we talked about these two, time frames, or two charts for SPY and Triple Q. Both of these ended up breaking out of that main moving average here on the 20-day time frame. And you guys can see on the intraday chart, we pretty much rallied all day. We hit a fresh intraday high at about, when was that? 3:45, 3:50 p.m. on the East Coast. Triple Q hit about 3:46. Then we had Netflix report, which we'll talk about that in a couple of minutes, guys. We had Netflix report, and now the markets are down a good chunk in the aftermarket hours. So I'd say today overall was a pretty good day. I mean, we'll see how tomorrow plays out. We'll talk more about that later in this video, but today was pretty good. We broke this moving average on SPY and Triple Q, and I'm still waiting to see if Triple Q breaks 348. I think that is where we could get an even bigger reversal, or not even a reversal, but maybe a couple more green days in a row, right? So that's what I'm watching on Triple Q. And going back to SPY, we're still watching around, let's see here. Well, SPY actually broke above the highs from last week, or at least one of the highs being 445, so that's good. We'll see if it holds that tomorrow or gets back over it. Now, after hours, SPY's back under 445 because Netflix reported, and let's just say that ended up dropping the markets after hours. So for tomorrow, let's see if SPY breaks 445 and maybe starts making a push to 450. And not just for tomorrow, guys, for the rest of this week, these are levels that I'm watching. And let's see what crude oil did today. I actually didn't even look at crude oil today. It closed at $102 a barrel. Now it's down about $7 a barrel from where it was last week, or in other words, down about 7%. Or was that yesterday? Actually, no, that was just yesterday, guys. So crude oil's down 7% from yesterday. Now it seems like it's testing the wedge as support, or the resistance of the wedge as support. So we'll see what ends up going down here. Do we hold 100, 102 a barrel? I would say that needs to hold for the bulls. If it collapses under $100, $95, that is not going to be good for the bulls. So if you're long crude oil, if you're a bull, if you think it's going to go, or if you want it to go up higher, because nobody knows what's going to happen in the future, but we're going to need to see 100, 102, 105 hold here, and preferably get back towards 110, 115. That's going to be a big spot, in terms of resistance. So what do you guys think? Drop me a comment. Let me know your thoughts. And don't forget to subscribe. We're trying to get to 25,000 subscribers by the end of April. Make sure you guys do that. And with that being said, let's break down what in the freaking world is going on with Netflix, because if you guys remember, last time Netflix reported, this stock got destroyed. Take a look here on the 4-hour chart. This is when they reported last, back in the end of January. The stock closed at over $500 that day, or the day before. It was roughly at $523. They reported earnings, and then just a couple of days later, the stock was at $350. So from $520 down to $350. That is what it did back in January, heading into the early days of February. So in other words, it dropped 32%. And this is not some penny stock, guys. This is not some small company. This is freaking Netflix, for Pete's sake, guys. This is one of the biggest tech companies in the world. And the fact that it went down 30% in a day or two, a couple of days, that is very alarming. And guess what? It just did it again. Today, Netflix closed at $348. It went up 3% on the day, and now it's down to $260. It's almost down $100 a share after market hours, and it got down to $256, which was awfully close to $100 a share of a drop. So Netflix did not do well, obviously, yet again, guys. And percentage terms, on a percentage basis, it is down 25% after market hours. So let's talk a little bit about what ended up happening here. They ended up doing EPS of $3.53 versus $2.90 estimated. So that ended up doing pretty well. They did well on EPS. They beat by a big margin, but revenue, this is where it starts getting a bit wonky, guys. Revenue came in at $7.87 billion versus $7.93 billion estimated. So they came a bit short. Revenue came in soft, and this is the big blow, or at least one of the biggest blows, right? Q1 global streaming paid memberships were 221 million, up 6.7% year over year, which is not that great at all, guys. Global paid net additions were down. That's not good either. Let me say that again. Global streaming paid net additions were down 200K. That is not good whatsoever, guys. And I believe that is that net down quarter over quarter? I'm assuming, yeah, that's quarter over quarter. And their guidance is not good either. So they're getting hit left hook, right hook, jab, freaking kick in the mouth. I mean, Netflix is getting beat by every angle, from every angle right now. That this guidance is not, I'm not going to say it's the worst in the world, but they're not looking good on guidance. You know, they see Q2 revenue of $8.05 billion versus $8.21 billion. So guidance for, revenue, it's soft. EPS, $3 on the dot versus $3.01 estimated. That's a slight miss there. And they're looking at global paid memberships of 219 million, which pretty much is telling you, okay, next quarter they're looking to shrink. Their memberships are going to shrink by about 2 million. So they're shrinking quarter over quarter. Not good whatsoever. So I think at this point, Netflix pretty much has the U.S. market. It's saturated, and maybe it's been like that for quite some time. And Netflix said today, over the longer term, much of our growth will come from outside of the U.S., which I'm assuming, obviously that's what they should be focusing on over the next couple of quarters, next couple of years, and they probably will be focusing on that and hopefully growing the business abroad. And in the meantime, it's going to have some growing pains. It's kind of like what we're seeing with Facebook, where, monthly active users are slowing down or completely halted at this point. User growth is slowing down. It's pretty much down to zero at this point in terms of Facebook. We're getting a little bit of that here on Netflix. So in the short term, there's going to be a lot of pain with Netflix. No doubt about it. At this point, guys, get this. This stock is down from $700 back in, when was that? November. Now it just hit $256. So we're talking a drop of 63% for a company that is one of the FANGs. Facebook, Apple, Amazon, Netflix, Google, Microsoft should be in there, but whatever, it doesn't really matter. But it is one of the big tech names, right? That's what matters, not the term of what they're called, right? And the fact that it's down 65% is just mind-boggling. Could you imagine if Google went down that much, or Apple, which I doubt either of those two would go down much, but could you imagine if they did? That would just be nuts. So at this point, I'm not giving you guys financial advice, and full disclosure, I'm not buying Netflix here. I'm not saying I will never buy Netflix, but I'm just kind of weighing it out. I might do more research. I might buy some. All you guys on my Patreon, you'll find out. You get all my buys, sells, all that good stuff. That's linked down below if you want to join. But overall, I'm not really looking to dive in quite yet. I might, but I'm just playing it safe, and I might even make a video on it, going more in depth on Netflix, the business, growth prospects and so forth, numbers, yada, yada, yada. Let me know if you guys, want that. Drop me a comment. So Netflix dumped very aggressively, and it's probably not going to recover tomorrow or the next day. It might keep on bleeding, guys. It's a falling knife at this point. And as Netflix is dropping, you bet your Disney's dropping as well. So Disney closed at $132 today, up over 3%. And now after hours, it is down about $6 a share, guys, or in other words, 4.5%. So it gave back all of that gain and some. The stock's now down a good chunk after market hours, and that's clearly because of the Disney Plus segment of the business. And people are assuming, hey, if Netflix's numbers weren't that great, Disney Plus, that's probably not going to be great either. But the beautiful thing is with Disney, they have other segments to their business where, let's say if Disney Plus slows down a little bit, the numbers aren't as great as they once were, which, let's be honest, they're not. The growth isn't as great as it once was. But, if we have other segments of the business picking up the slack, that's going to soften the blow for Disney. But Netflix, it's really just one. They're just streaming. It's not like Netflix has theme parks or I was going to say movies. They do have movies, but they don't have cruise lines or whatever. You know what I mean, right? So that is the big difference. And I might even buy more Disney. As you guys, my Patreon know, I've been buying Disney left and right lately in the 130s. And now that it's under $130 a share, guys, and if it stays under 130 and maybe goes under 120, which would be awesome, I'm going to have to pick up some more. So that's Disney. IBM, which you guys saw the chart in the beginning of this video, IBM is up a decent amount after market hours here, and they went up on the day as well. They went up about 2.3%, closed a little bit above $129 a share, and they shot up to $135 roughly after they reported, and now they're hovering a little bit under $131 a share. So they did pretty well with these numbers, guys. EPS came in at $1.40 versus $1.38 estimated. Revenue $14.2 billion versus $13.8 billion estimated, so double beat for IBM. And I think a big reason why the stock was moving up and is still up after market hours right now is the fact that they see full year 22 constant currency revenue growth at the high end of the mid-single digit range. So we're talking, 7, 8, maybe 9% growth for, constant currency revenue. So pretty good numbers from IBM. And I might dive deeper into this one. I probably will, after I make this video and, maybe tomorrow morning as well. So IBM is one that is breaking out. It's been breaking out, not just from today, but the past couple of days. It's above both moving averages. And now we're pretty much fighting with the resistance from the end of March, being around 133. We momentarily broke above it about a couple of hours ago after the earnings came out, but now we're back under 133. So moving forward, I'm going to just be watching that point, 133, 134. I'm going to put an alert at 134 right now. If we break out of there, this could start making a move 140, 142, maybe even higher. That is where I believe this could be going based on this chart and previous levels of resistance. We also had IBKR report today, which is Interactive Brokers. They went up 2.4% on the day, and it seems like the stock is down about $1.20 after hours, pretty much giving back all of the gains. So they did 82 cents of EPS, which came in line with the estimate, and revenue came in at $692 million versus $696.12 million estimated. So nothing crazy, revenue missed by about $4.5 million, a little bit less than that, and EPS came right in line. And based on this chart, guys, what I'm noticing right now is the start of potentially an inverse head and shoulders. You guys can see we have the left shoulder right there, we have the head right here, and then we have the right shoulder right here. You guys can see that, right, left shoulder, head, right shoulder, and I have my alert still at $68, which is right by the moving averages on this 4 hours. So if we break out of 68, break above 70 especially, guys, that right shoulder could really start gaining some steam. And, we might be making a move towards the mid-high 70s, heck, maybe even 80s, 80s at some point. I'm not getting ahead of myself yet, so I don't want to say for sure 80s, but I'm just thinking out. I'm thinking out a couple of months, based on this pattern and what it could get to. So keep your eyes on IBKR, and we also had two other ones that, two other companies report today, but they were in the morning. I'm not sure if you guys caught these, but J&J reported today, hit an all-time high at almost $186. It went up over 3% on the day, and they reported some pretty good dang numbers in my personal opinion, even though they missed revenue by a little bit. So they did EPS of $2.67 versus $2.61, which beat. And we had revenue, like I said, they missed by a little bit, $23.43 billion versus $23.67 billion. So a little beat, or a miss rather, a slight miss there on revenue. And the beautiful thing is, guys, if you're a dividend investor, which let me know in the comments if you are, they increased their quarterly dividend by 6.6% to $1.13 per share. And like I always say, when we talk about inflation and dividends, you want to see your dividend income increase, or the dividends paid out to you by the company increase more than inflation, or at least match inflation. So let's say inflation's 5%. If J&J grows their dividend by 6.5%, that is really good. You have to treat your dividend income and how much they increase it year over year. You have to treat that like your job income or your business, right? You want to be making more money, increasing that year over year to beat inflation, hopefully beat inflation, or at least keep up with inflation. So J&J is looking good. Again, we hit an all-time high today. Uptrend is continuing. And these healthcare stocks, they've been on a roll. I've talked about them countless of times here on my YouTube channel. So at this point, we have to go with the saying, don't fight the trend. The trend is clearly bullish. We just hit an all-time high. Don't fight the trend, guys. So I'm watching J&J. I'm watching AbbVie, another healthcare stock, which now is actually off the highs, a good amount, about 11%. They dropped close to 12% actually from this recent high, which is good. So this could end up being a dip buy potentially. I'm watching AbbVie. UNH is another one that I'm watching. It went up 0.7% today. Of course, we could talk more and more and more about these healthcare stocks, but let's talk about Lockheed Martin before we wrap this video up. And if you all stuck till the end, let me know in the comments. Lockheed Martin Lmt is the ticker. This stock went down 1.6% today, and we're noticing this is still holding the uptrend, the 50 SMA on the 4-hour chart. We're noticing the ascending triangle is still intact. So ultimately, if it does break 480, we could get that big leg up, maybe towards 490, 500. So that is one good thing about this chart. But one thing that's not so good is the revenue. The revenue for the previous quarter. It came in at $15 billion versus the $15.55 billion estimated. So that was a pretty big miss for Lockheed Martin on revenue, but EPS beat. EPS came in at $6.44 versus $6.21 estimated. So kind of a mixed bag for Lockheed Martin on earnings here, and the stock kind of reflected that. It went down about 1.6%. So moving forward, like I said, where we're seeing this ascending triangle, uptrends continuing, all that good stuff. I want to see if we hold the 50 SMA, which as of now we are. We are holding about $458, $460. And the reason why I'm saying that is because if we break under 458, 455 even, there's going to be maybe some selling pressure, in my opinion, down to the 180 SMA being around $438 to $440, which quite frankly, that could also be a pretty decent spot, in my opinion, of course, to maybe pick up some shares. So that's Lockheed Martin. That's a quick little breakdown on everything else, guys, stocks, the markets. What do you think? Let me know in the comments, hit the like button, and don't forget our subscription challenge. We got to get to 25,000 subscribers, guys, sooner rather than later. So I challenge you all, hit that like button. By the end of April, if we get 25,000, we'll see what we'll do, guys. We'll see what we'll do. And make sure to also get your free money. Don't forget to do that. 6 free stocks, up to 6 free stocks, each of which could be valued all the way up to $3,500. Just use my link down below, or go to stocksurfest.com/moo. Deposit at least $100, and boom, you get some free money. Who doesn't like free money? And with that being said, peace out, guys. I'll catch you all in the next video. See you tomorrow.